in the next couple of minutes, we're going to have a look at one of the topic areas in the CFA curriculum, financial statement analysis. In terms of how this appears, for the 2023 exams, it's 13 to 17% of level 1 and 10 to 15% of level 2. So it's a fairly large chunk for both level 1 and level 2. It doesn't actually feature in level 3. Going forwards into 2024, these weightings are adjusting slightly, but not a huge difference. They're going to overall be a similar portion of your exam. Now you might be wondering why. If you are sitting the CFA exams, you're thinking, well, I'm not training to become an accountant. Some of you might already have done that, but for the majority of candidates, you're thinking, I'm not trained to be an accountant. Why do I need to understand financial statements? Why do I need to understand how they're produced? Why do I need to be able to produce them? And it's a very common question. As you explore the topic, especially if you're looking at this from the perspective of your level 1 exam, you'll hopefully discover how important it is to understand the financial statements of various different firms. One of the key examples would be which financial reporting standards the firm follows. So the CFA curriculum looks at IFRS, that's the international reporting standards, and US GAAP, so the US specific ones. There are of course other ones globally, but they're the two that are the focus of this exam. We need to be able to understand what the story is behind the financial statements which are produced. We need to understand what the different components are of the financial statements, and this is going to help us make comparisons between potential investments or investments that the firm already holds, for example. I mentioned IFRS and US GAAP. You're going to need to be able to make suitable adjustments and understand the differences between IFRS and US GAAP. If one of the most important things is to be able to understand the financial statements and do comparisons, you need to know where the differences lie and be able to make adjustments. So maybe two competitors or two potential investments, you're able to adapt the financial statements to make them more comparable to each other. And on top of this, ratios is a really important part as an analyst. You are going to need to be able to compute ratios based on the financial statements, and more importantly than computing them, interpreting what they mean. Is this a positive sign for the business? Is this a negative sign? What does it mean? What might I need to watch out for if this is a firm we are going to invest in or are thinking about investing in? Now, in terms of how this gets covered over level 1 and level 2. Level 1, of course, first off introduces you to the financial statements and financial statement analysis. So it looks high level at what the key different financial statements are, so your income statement, your balance sheet, your statement of cash flows, and thinks about the analysis side. What do we want to be able to get from looking at the financial statements? There's a key focus at level 1 on assets and liabilities that sit in the balance sheet. So whilst the income statement is covered, the main focus is on assets and liabilities, and it looks at a few of these in more detail. So for example, inventories and deferred tax, which have their own readings. At level 2, of course, it builds on level 1 and goes a step further. So the key topics that are covered at level 2 during the 2023 sittings are intercorporate investments, so looking at associates and subsidiaries and how they are accounted for in the financial statements. Employee compensation, so that would be post-employment, so pensions, share-based compensation as well. Multinational operations, so bringing in exchange rates and how they affect the financial statements, and then moving on more to the focus of the analysis. So building on what was learned at level 1, thinking about how can we evaluate the quality of the financial statements, how can we integrate analysis techniques that have been learnt. And there's also a look at financial statement modelling as well. In terms of top tips on how to approach this topic area within your CFA Level 1 or Level 2 exams, I would always say with financial statement analysis, you need to make sure you're happy with the big picture. What do the key financial statements show? How does anything you're looking at, inventory, post-employment benefits, so your pensions, for example, how do they affect the financial statements at a high level? Are we looking at assets? Are we looking at liabilities, income, expenses? Once you have that big picture understanding, you can then look in more detail at the kind of granular information. Make sure you focus on the impact any of these transactions have on the financial ratios, the analysis side. That is going to be crucially important. Start practicing questions right from the beginning, even if you don't think that you're quite ready. As soon as you covered one particular topic area, make sure you are practicing questions. So if you are signed up to a Schweser course or one of our products, you'll have access to many questions, and make sure you're starting those straight away so you can get to understand how these topics might be tested. And yes, the numbers are important in financial statement analysis. Of course, without them, we wouldn't have financial statements, but they are not enough. Do not get bogged down so much in the numbers that you neglect that big picture understanding of what each transaction means, how it might affect ratios and analysis. Yes, the numbers are important, but they are not enough. Make sure you're looking at what they mean as well.